G'day guys, Seeney here, and welcome to another episode on the Australian Wealth Channel. And I think it's time that we talk about the stock market. So thank you guys so much for watching. Please make sure you like and subscribe to this channel. Really helps to get these videos out to more people. So anyone that's been following the stock market, particularly in the US, has seen that it has been an insane ride. There's no other way to talk about it. You know, it's just been crazy market conditions. Now, as we saw in 2020, the market just went absolutely insane once the Reserve Bank in the US announced that they would be lowering interest rates and flooding the market with money. And we saw that over 2020, stock market went fantastic. In 2021, however, basically the entire year, there was a lot of money that was being taken away from small caps and put into large caps. It seemed like a little bit more of a risk-averse market in 2021, and consequently, a lot of my positions and a lot of people like me have seen their stock portfolio shrink because of the type of assets they were buying. Now, the reason that I've been buying small caps at the moment is because they're trading at such a huge discount at the moment relative to the rest of the market. It's actually crazy. So I believe at the moment there's a lot lower risk in buying these companies than there was potentially last year because the valuations have come down so much. So for them to fall even further, you know, it could definitely happen. You know, the Wall Street owns this market, so if they want them to come down, it's going to continue to come down. But I think that the risk to reward is even better at this point. Now, of course, you need to make your own decisions when it comes to investing, but that's what I'm currently doing, is continuing to buy small caps that have been beaten down. Now, it's really easy in this particular market to get a little bit unsettled when you're seeing a lot of red. And personally, I have seen a lot of red in my portfolio because I'm buying up those companies that have brilliant futures in front of them, that have been executing on their visions, but because of the type of company that they are, they're starting to get absolutely beaten down in the stock market. So there's a lot of these companies in my portfolio, such as Tattooed Chef. On top of that, there's Voyager Digital. I've started buying Affirm and a few others like that, such as Corsair Gaming. It just got to a price where I couldn't not buy it. So we've seen that a lot of these stocks have been absolutely decimated and continue to be decimated even more week after week, month after month. We thought, you know, it could potentially be over after these large caps started to fall, but we've seen even more pain in the market. One example that I can refer to is Affirm. This was trading for about $160 a share, and at that price, you know, it was quite rich, but it was still reasonable based on the quality of the company going forward. Now, what we've seen is Affirm has come down massively in value to the point where it's trading in the 40s. All the way from 160 to the 40s. So ever since about $100 a share, I've started to buy this stock. It's been one that I think is going to bounce back very strongly in the future. You know, they're just a company that is executing really well. So it's a company that I've been quite interested in. And over the last couple of weeks or so, I've loaded up quite heavy and doubled my position in Affirm around that $50, $60, $40 mark. Now, of course, you need to do your own research. Don't just buy it because I think it's good. Who knows? It might continue to go down even more. Now, the reason that Affirm has dropped so much very recently is because someone in their company accidentally released their earnings to Twitter before they were due to come out. Now, these earnings were actually really good. The revenue growth was fantastic. It far surpassed what analysts were expecting. However, the losses were a little bit bigger than what was expected because of stock-based compensation and a few other things with scaling the company. Now, this is always the game plan with so many of these types of companies. Shopify, Uber, you know, all of them grow as fast as they possibly can, and then once they own the market, they turn on that profitability and become incredibly profitable companies. And I believe, even knowing there's a lot of competition in this space, Affirm, through their financial results, has shown that they're able to compete in this market and still do really well, regardless of the other companies that are competing in this market, such as PayPal, Square, Afterpay, whoever else. So while it's really difficult to see the stocks just go down constantly day after day, week after week, it's really important to be taking a long-term vision, because these market dips in companies in the indexes, they're all short-term blips. There's always going to be worries in the economy regarding this or that. Have a think about the last 10 years and all of the things that have happened. It's just crazy, but yet the market has continued to go up. And of course, the market goes through cycles, so we might see this happen for the next year or two. We just don't know. But if you're choosing good companies that are continuing to execute and grow through this period, then that's really all you can do. You just need to have the testicular fortitude to not sell out if you know that you have a great company. If you haven't done your research and you're just buying junk companies, then yeah, you should be scared because you don't know what these companies are going to do. But if you have done your research and you know what to look for, whether it be price to sales ratio, the revenue growth, and combining all these things together with the total addressable market, so many different ways to value companies, then these stock prices that we're seeing right now are an absolute gift. I personally believe in 3 to 5 years, we're going to look back at a firm stock price at $40, $50 a share and just see it as an absolute gift and think, well, why wasn't I buying it then? It's the same thing that happened during the pandemic when the stock market crashed. I was buying Revolve at $8 a share, and have a look at where it is now. Now, there's a lot of fear and uncertainty in different times, and that is what we're seeing now. And that is why it's easy for people to get rich in a recession or a down market, because it's locked in when you buy. When you buy at an incredible price, then chances are, if you have the fortitude to hold on, if you picked a great company, then you're going to make a lot of money out of that. Now, this market is completely risk averse to companies that aren't making money or are even slightly profitable. Shopify, for example, is one that I believe is just about to be making a reasonable amount of money, but they're not super profitable like a company like Apple. But they, of course, have been slammed. And a lot of companies like that and companies that are unprofitable have been slammed. But I guarantee over time, the mood will change. The market goes through cycles. Sometimes it's value stocks, sometimes it's growth stocks, sometimes it's the companies that are super profitable, sometimes it's the companies that have huge revenues. So we just don't know. The important thing is to make sure you're doing your research, keeping up to date with all these companies, looking at their fundamentals, make sure that they have a market that is going to continue to grow in the future. And if you can hold on during these difficult times, then you'll be handsomely rewarded. So thank you guys so much for watching this video. Please make sure you like and subscribe to this channel. If you'd like to get yourself a free stock, I have a link to Stake in the description. Deposit money in the brokerage, you'll get yourself free stock. If you want to track your net worth, I have a link to WeMoney in the description. They'll give you $5 just for signing up and connecting an account. They're a great company, and it'll just automatically update your net worth, which is fantastic. So thank you guys so much for watching. Please make sure you like and subscribe. I'm continuing to buy in the stock market. Let me know what you guys are doing in the comments section. Thank you, and we will see you later.